Taking a look at the second half outlook with this two-speed recovery still ongoing, where do you see the leaders in the back half of 2021?
Well, the leaders are going to be the economies that are most export sensitive. So that would be Korea, Taiwan, Hong Kong, and Singapore, and the economies that have been least damaged by COVID and therefore are best placed to see domestic demand continue to expand or expanding as exports do well. And that would be Korea, Taiwan, Hong Kong, Singapore, and China. The other economies are less export sensitive, so they're going to benefit less from this remarkable growth that we're seeing in the US and Europe that we expect will continue for another couple of quarters. Their exports are growing relatively quickly for them, but there's historically been much less pass-through, if you will, of that export growth to domestic demand. And the COVID pandemic situation in those other economies remains sufficiently worse that domestic demand remains very restrained. So two speeds, exports doing better than domestic demand across the region, and the more successful economies in containing COVID so far are doing much better than countries like Indonesia, Malaysia, Philippines, India, and Thailand.
And Michael, the recovery in China, that is allowing the PBOC to shift to a more neutral stance. Now, we do have credit growth and inflation data due from the mainland this week. You're saying that there are easing concerns around a credit crunch in China. We have seen that credit impulse slow down after hitting a peak earlier this year in China. What's framing this perspective?
I think the Chinese authorities have done a very good job of withdrawing both fiscal and monetary stimulus relatively early on. By early fourth quarter of last year, it was clear that the policy bias was shifting at least to neutral, if not from the fiscal policy perspective so far this year, quite tight. The fiscal deficit, broadly defined, is down about 2.5% of GDP over the last 5 months, which is a much faster tightening of fiscal policy than was budgeted for, and does suggest maybe there's room for fiscal ease in the second half of the year. But the PBOC, I think, has done a very creditable job of withdrawing this fiscal impulse, the monetary impulse. It's causing some anxiety because credit growth is slowing fast enough that if you measure the credit impulse, the change in credit as a share of GDP, it hasn't been this low in 20-something years. But if you look at it from the way I think the Chinese policymakers do, how are we doing today in terms of data relative to 2019, and look through the COVID crash and recovery, then I think you've got a healthy increase of new lending of about 11 or 12%. It's a little bit slower than nominal GDP growth. It's consistent with a desire to gradually delever the economy. As I said, I think the monetary policy, fiscal policy mix is appropriate, and they've done a very good job, I think, so far of managing that withdrawal of stimulus.
Michael, today investors are really scrambling to get their heads around what's going on with Didi-Chuxing. Of course, this regulatory crackdown just days after the company was allowed to go public in the US. Does this tell you that the regulatory overhang and uncertainty remains a key issue for China?
I think in new economy space, there is still real concern. There's a lot of work to be done. The policymakers essentially have three broad objectives. They're trying to regulate fintech. If it performs a banking-like function, they've decided it really should be regulated like a bank. And a lot of fintech essentially existed because of regulatory arbitrage, and the policymakers are removing that. And that's going to cause real consternation, I think, among investors in many businesses. Secondly, there's the anti-monopoly concern. Many of these platforms in particular had gotten so large that the government really was concerned that they were abusing their market power, and that's been an important thrust of policy over the last 9 months. And then you have the data privacy issue, which is the most recent in the news over the last couple of days. That also is a concern not just of Chinese consumers and users of these apps, but for the government as well. So having gone from an almost entirely unregulated internet economy, and in many respects the most vibrant internet economy in the world, to now gradually, and maybe not even so gradually over the last 9 months, trying to impose some regulatory order and control over the space, I think is a dramatic about face, and particularly comes, I think, as a real shock to many investors. I would argue it's essentially a healthy thing for the new economy to continue to drive growth in China, and indeed the government's relying on it to be even more important as a driver of growth. It does need to be regulated. It needs to be controlled in some respects.
Also, a healthy thing is monetary policy normalization, right? But there's still so much concern about that. The RBA, for one, is expected to just gently start reining in tapering this week, despite a lot of the population here still remaining under lockdown. Is there a concern that this is sort of too early, given the question marks we have over the sustainability of inflation?
No, I don't think it is. I think what you're seeing, not just in Australia but everywhere, is central banks put in place again real emergency measures, asset purchase programs much larger than we saw 11 years ago, and they've been clear that they want to remove those and return to a more conventional policy footing as soon as there's no longer an emergency. Now. In a few economies, we thought maybe there was no emergency 6 or 9 months ago, and then we've had more outbreaks. So I think the intention to gradually shift from quantitative easing of some form back to a interest rate-based monetary policy is a healthy thing. It's the right thing, and I would argue the timing is about right. But there's no question that it's going to be an extremely cautious, data-driven, and here really COVID data-driven process. If Australia were to unfortunately go through another major wave of COVID infection, it's clear to us that the RBA would pull back on its withdrawal of stimulus, if you will. And the same everywhere. Central banks are groping around with when to start and how slowly, rather than how quickly, how slowly to withdraw monetary accommodation once the emergency is over.